room.
Well, hello and welcome to a fresh new edition of Bazaar Morning Call. It's a very special day for all of us here. It's CNBC-TV18's 23rd birthday. I'm Prashant Nair. With me, my colleague Sonia in the studios. And of course, Nigel is joining us from a different location. 23 years. I think, that really kind of summarizes why viewers tune into CNBC-TV18 every day. It's an absolute pleasure and privilege to get to you viewers information day after day. Sonia,
absolutely. Hi. Happy birthday, CNBC-TV18. Happy birthday to all of us, to our viewers, to our followers. And on the top band, you can see when we started off, right? The Sensex was at 4,500 and the Nifty was at 1,800.
Yeah.
Way back 23 years ago. And what a long way we've come. The equity cult has come a long way, and so has our channel. So it's celebrations galore today. And I think we're missing Nigel here in the studio. I think he's off to party. And where is he at? There, right there at the exchanges. Nigel, it's party time.
Well, that's right. It's party time, and we want to thank all our viewers, first of all, for supporting us over all these years. Your feedback is very, very valuable, and your support has been valuable. But since it's a big party, we had to make it a little bit more special, right? So we're coming to you live from the National Stock Exchange here in Mumbai, the headquarters, and we'll be getting you the top market voices, the top market opinion, all through the day. So you stay tuned to us, and later on in the day, we'll get you another surprise as well. So, guys, I'm coming live from the National Stock Exchange. I don't think it gets bigger than this, right? So let's get the party started.
Surprise, I hear. So I hope it's cake. It's something sweet because it's 23 years, right? I mean, it's not a small time. So
a 23 kilo cake, Sonia.
23 kilo cake is something. At least I'm expecting that. Nigel, what about you?
Well, it's going to be a special one. I'll tell you what, guys, it's the big party, right? I'm not coming back to office, but I'll be joining in all through the day from different locations. So let's see how that goes. And if there is some cake, Prashant, you've been talking about it from yesterday, please let me know. Then I'll definitely visit the office and, knock in the cake, the drinks, whatever you want to do. But I'm telling you, I'm in party mood today.
Nigel, Nigel is going to be at the NSE, then he's going to be at the BSE. So just tell me where you're going to be at, Nigel. So we'll get the cake delivered, cake and drinks delivered right there. Nigel is going to be there. Our colleague Shireen, of course, the managing editor, is going to be there at the NSE. There will be Nimesh, who will join us from the NSE as well. And of course, as Nigel pointed out, all of the top minds from corporate India, from the world of markets are going to be joining us from the NSE, the premier exchange in the country. Let's just quickly, for our viewers, sort of get on with the business of day-to-day tracking markets. So how are things looking this morning? You've got the US markets, which sold off once again. So for the fourth straight day, US markets are down. This is looking a little worrisome because the S&P has been down 7 days out of the last 8 trading sessions. And people are starting to ask the question whether, this grinding higher kind of market that we were seeing in the US, that is finally starting to come to a bit of a halt. I was talking about wicks, which, by the way, the CBOE wicks, which hit 19-ish levels last Friday, and how around there it starts to bottom and starts to bounce. The CBOE wicks is up 17% since last Friday. The big positive for India is oil prices, which is down 9% over the last 3 sessions, right? The problem is it's not showing through. It's not showing through, especially in the currency. And we were talking about this in the last 30 minutes, last 45 minutes of trade. The rupee has lost almost 150 paise in the last 3 trading sessions, right? Now, this is worrisome. Oil's coming off. It's the single biggest important macro variable, and oil, and you've got the rupee, which is under pressure. I mean, it's not as if the dollar has seen a blowout move or anything of that sort, so we'll have to keep track of that. We'll pose that question to experts later on. And of course, there is the RBI today. The big question is, will we see a change in stance? I mean, a hike, it's perhaps 25 or 35, but will we see a change of stance in terms of what they do with liquidity? Supports we've been highlighting come in for the Nifty at about the 20-day moving average. By the way, the 20-day has also moved up a little bit. It now stands at about 18,439. And if you are going to test higher levels, I mean, the level to take out is 18,887, which was last Friday's high, the recent high, swing high, so as to speak. So that's a quick setup. Sonia, what are you watching?
So I know it's party time here at CNBC-TV18, right? 23 years is what we've completed. But for the market, doesn't look like it's going to be a party time for the bulls. I mean, let's be honest. There are weak global cues, and the market is definitely going to react to that. The SGX Nifty for now is indicating a cut of about 40-odd points. And remember, for our own markets as well, right? The Nifty ended in the red for the third consecutive day yesterday. And we've seen both foreign and domestic investors sell a bit in the cash market. So there is some, resistance at higher levels, if you'd want to call it that. There was 600 crores gone from FIs, 550 crores gone from DIIs. And yesterday is the RBI policy. There is a moderation in rate hikes. So after 50 basis points for so many rate movements, this time it's expected to moderate to 35 basis points. But it's important to see what the stance of the RBI is. Inflation has come off a bit, but what's the stance on growth and inflation is something that I'll watch for very keenly. There's the US Fed meet as well. That's on the 14th of December. So that's the next big thing that the street will watch. Now, there are a couple of levels, right? I mean, there's, of course, a 20-day moving average that all of us are looking at, 18,430. Does that hold? There's a range seen between 18,400 and 18,800. So that's something perhaps that you'd have to work with. There are a lot of global cues, Prashant, and there is a bit of trepidation as far as the global banks are concerned too. So that could maybe keep a lid on the markets, at least in the near term.
I mean, you've got all these top global bank CEOs, right? I mean, one after the other. JP Morgan, you've got Jamie Dimon, of course, has been saying this for a while now, that, I mean, a storm is coming, strong wind is coming. You've got Bank of America, Morgan Stanley, Citi, all of them, and the graphics will come up on your screen. CEOs of all these banks are warning about some sort of a slowdown in 2023. It's nothing new, but it's something to be cognizant of. At the margin, I'd just like to leave you with this thought. I've seen this before in 2008. I've seen this in 2013, 2018. Banks are a big sort of part of the entire financial sort of sector in the US. I mean, the biggest. And they have an oversized influence on policy as well. So when bank CEOs start to say, well, a recession is coming, a slowdown is coming, policymakers sit up and take note, right? I mean, some of them have also been saying that perhaps at the margin, enough has been done in terms of tightening, etc. So is this kind of a veiled message to policymakers? It could be that maybe enough has been done and don't tighten too much. But in any case, these are comments from top global bank CEOs, so we have to take note of them at this point in time. Nigel, what are you watching from the futures and options space?
Well, yesterday we, as you were mentioning, the institutions, they sold 1,100 crores and we entered down a paltry 50-60 points, which is par for the course. Now, buy on dips, that played out yesterday, and I think that's likely to be the trend as well. In terms of the mid-cap action, yesterday the mid-caps, they fell as much as the Nifty. But the small-cap index, that was a relative outperformer. And for me, that's encouraging. And I'll continue to track the breadth of the market because that's what makes portfolios feel good. Now, why did we fall then? Why did we end lower in trade yesterday? One was the institutions sold. The second factor is there was unwinding of positions, both on the Nifty open interest as well as the Nifty bank open interest. There was some shedding in terms of open interest. So that explains why, unwinding of long positions did take place. And the FI data perfectly ties in with that. The FIs, they reduced their long exposure and they added their short exposure. And we were asking for some shorts in the system. Well, it seems that wish is coming through, at least from the bullish perspective, actually. Because if these shorts don't get follow through, we'll see a bit of a short covering bounce. And just take a look at the change. From the start of the series, the short positioning was only around 23%. That's moved to around 38% odd. So far more shorts in the system, which is not such a bad thing. On the option side, well, the only worry is the call writing continues. And the recent highs will be a bit of a resistance level. So yesterday as well, we did see, a fair bit of writing in trade, and the FIs, they've been writing calls. But the 18,600 put in a falling market was very active. The signs are that there is writing at that level. So the 20 DMA becomes crucial. You need to stay long on the index till the 20 DMA on the Nifty bank. The level comes up for you on the screen. That's around 500 points away from current levels. And on the Nifty level as well, the 20 DMA is important, but I think the 18,500, 18,550, I'm expecting a bit of a fight at these levels. SGX Nifty suggesting a flattish to a mildly negative start. So buy the dip, maybe closer to around yesterday's low, a little below that, 18,550, the crucial level. And we'll hear from the RBI governor, and let's see how things move from there. Back to you guys.
Oh, absolutely. The RBI governor today, you have the US Fed meeting on the 14th of December. There's a 50 basis points rate hike expected there. So lots of central bank action as well is what the market can look forward to. But let's kickstart the show. In about 1.5 hours from now, you'll have the RBI monetary policy. So more on that in a bit. But in the meantime, on the equities front, our first opinion of the day coming in from Vikas Jain of CLSA, who says that 2023 may see an impact on growth due to aggressive tightening action taken by the Fed and the possible strength in the Chinese economy after it opens up, even as the market seems to be sanguine of a soft landing. He says an extended absolute and relative valuation of India, along with a recent jump in investor sentiment to an extended 90% bullish level, is possibly warning us of a low to negative return in 2023 and a likely migration into debt from equity both in India and globally. He says the election cycle playbook suggests a top in January, followed by a double-digit pullback in the Nifty as the government possibly gets more focused on key elections.
Well, some money market views as well. This is Kunal Sodani of Shirin Bank, who says headlines surrounding global economic growth. Russia portray a contrast with China's COVID-linked optimism. He says Brent crude prices are at yearly lows. He adds it is also important to note that the lower forward premium in the dollar INR makes carry trade unfavorable. He says exporters thus remain less enticed to hedge, thus reducing the supply of dollar in the forward market, which in turn also suggests dollar cash crunch in the market, pushing the pair higher. He says all eyes today are on the RBI policy. For the USD INR pair, he expects 82.2 to a dollar to act as a support, while 82.8 as a resistance.
Okay, it's important because there was a big crash in the rupee yesterday, 82.60, right? It's almost a 1-month low. On the bonds, here's what you can expect. Neeraj Gambhir of Axis Bank says the market finally broke the resistance of 7.25% on the 10-year and traded up to 7.18% before retracing some of the move on a weaker auction. For the rest of the week, he says the market will take direction from the RBI MPC and he expects a base case of 35 basis points rate hike. He expects the 10-year benchmark bond yield to trade in a range of 7.15 to 7.3% in case there are no surprises from the RBI. All right, well, that's the views coming in. We have a lot of stock-specific action to track today.